Edward Stevenson, TimelessWealth.net, and the following is basic technical analysis on Zevotek Incorporated, traded under the symbol ZVTK. Coming off of Tuesday's trading session, shares of Zevotek Incorporated tumbled nearly 40%, what seemed to be just a tough day overall. Before you, I've drawn the 60-minute chart, which means every bar and or candle represents 60 minutes or 1 hour worth of price action. The reason I chose to go with these intervals is to show you in greater detail what exactly happened on Tuesday's trading session. To begin with, the price opened high, in fact gapped up, and began testing resistance at 1 6/10 of a cent. If you watch my prior videos, you'd recall that I mentioned there was resistance at the 1 6/10 of a cent mark, as well as critical resistance at the 2-cent mark. However, not being able to surpass resistance, the price broke down, and we saw some bearish activity as this long candle formed, corresponding of course to this tall red candle, which would represent the volume that came in. So there was some profit taking and some selling going on at this point. That was evident, and as we had established, there was supporting levels below at 1 2/10 of a cent and the critical one at 1 cent. When it had reached this point, I believe that I was watching the market and thought it would rebound. However, that had not occurred, although it did test and hold that mark for quite a while. Unfortunately, broke below it, and this became resistance. In that same hour, it began testing the 1 penny mark, and I thought for sure that we'd get a rebound off the 1 penny mark, or somewhere in between the 1 2/10 and 1 cent mark. However, that was not the case either. So this too became resistance. It was not until 2 hours later, this candle right here, that the price broke above this mark once more and established it as support. What happened at this point was that when this dipped, and I'm talking about the wick right here, momentum players jumped in for what's typically known as a bounce play, and they got in here and more likely than not exited here when they saw the price wasn't moving up any further. Unfortunately, 2 hours after that, the price broke down below this supporting level once again after what seemed to be quite strong support at the 1 penny mark. So this once again became resistance. And to close the session, the price closed at 0085, so well below that 1 penny mark, which is now our crucial resisting level. Some of you may be listening to this and interpreting it as a sign of hopelessness, that I'm teasing someone, but in fact it's the complete opposite. I mean no harm by mentioning the fact that this is what happened. I would have liked to seen it happen a different way. Unfortunately, this is what it is, and we have to look forward to what we can expect tomorrow and the session afterwards, and perhaps even the week afterwards. So let's take a look at some supporting levels in the event that the market continues retracing. First off, we're looking at support at the 008 mark, so that would be around here. If you recall my very first video, I believe I issued it a week back when we were at the 004, 005 area, I believe. I had mentioned that 008 would serve as a resisting level. We had broken past it and it became support. Now that the price had rallied to what was 1 6/10 of a cent at one point, we are once again testing this supporting level. So hopefully we'll see a rebound off of this level. This last candle that formed, which represents the last hour of trading on Tuesday's trading session, is encouraging in the event that we see some sort of confirmation to what is potential reversal signal. What this hammer candle would represent here is that although the market dipped to 0081 per share, the bulls pushed it up towards the end of the session to close at 0085. So that's one encouraging sign to come at the end of the day, which is always nice to see, especially on a tough day like this. The second level of support that is very evident on this chart is the 50 period simple moving average, and that would be this red line right here at 0069. Let me just adjust that there. Something like that. And of course in green. So these would be the two key supporting levels that I'm looking at. Of course, this is a 60-minute chart, but again, these levels correspond to both the weekly and the daily charts that I had annotated in the past. If you remember, 008 was mentioned a few times. I even believe I mentioned 0068 or so once or twice. And again, the encouraging sign is the fact that the shorter term moving averages are all lined up nicely. It's only the 10-day simple moving average has begun to curl down. Otherwise, you have the 10, you have the 20, the 50, the 100, and the 200 all curling up nicely. So overall, this is hardly the end of anything. If anything, this could be the start of something even greater. It was only natural that the market had to decline. In fact, if you remember, I had talked about the technical indicators here, like the RSI. I had mentioned that it peaked on the daily chart, especially here. You can see it's retraced now. Again, this is a 60-minute chart. MACD has retraced, as has the ADX. You can see full stochastics is now oversold on the 60-minute chart. Money flow index basically getting there as well. So this was a anticipated move. I hadn't expected the market to retrace 40%, but I did expect it to retrace, and we are where we are. So again, a few key things to keep in mind while you're watching the stock price move. We're looking at support at 0069, 008, and resistance, quite critical resistance at the 1 penny mark, the 1 2/10 of a cent mark, the 1 6/10 of a cent mark, and hopefully at some point in time we'll test the 2 cent mark. Once again, this was Edward Stevenson from timelesswealth.net. I would encourage you to visit my site, check out some of the materials I've recently added, and subscribe to my free newsletter for overlooked trading and undervalued investment ideas. Thank you for listening.